basically, these are the changes that he made. And some of you may be acquainted with this. We used this last year, but we've made some modifications for the current year. So basically, he changed the 7 brackets into less brackets. And it's interesting to note that most people are paying more money. Wow, how did that happen? It just did. So that's one of the things that we do here. These are some of the changes that he made. Some people actually benefit from this. The interesting part about this is that more people are filing standard deduction returns versus just the itemization. So people come with their mortgage interest and their taxes, and it makes no difference because of these large things he's done here. However, he has modified the tax rates to actually take into consideration all of this. So even with all of that, except for the people who don't have a lot of itemized deductions, most people are paying more. That's the case. It's interesting to note that one of the objectives that he had was to change a lot of transactions into corporate form. And the corporation taxes are much, much less than they were. That's pretty serious, 14%. It was as much as 15% last year. It changed to 14 this year. These are the things that he has done, but now what he is trying to really focus on, because we have to accept that even though taxes is a group of laws to get revenue for the government, there is some purpose behind all of this. And so that is pretty much to get more people to get involved in corporations. They use that more, and that works for us accountants, so we appreciate it, you know. But what is interesting about that, the form of doing business now is much more complex than it once was. So these taxes, you imagine, it's not just the tax rate, it's not just the amount of tax you pay. It's also the way that the business is structured because of these rates. And so that's a very, very important situation that has to be considered. He has wiped out some things, which the list is long and distinguished. He tried to wipe out the Obama Health Care Acts. He wasn't able to do that, but there are some other things that were in the tax law that have been eradicated. So we can see how that this is the situation that he wants. He wants to change how people do business. And that's one of the reasons why this is done. All of the changes pretty much lend themselves to that. So listen, I think I'm out of time, and thank you very much.
Hi, good afternoon. So Professor Tucker was basically emphasizing the individual aspect of the tax laws, right? Because this conference is on business, I want to talk a little bit about small businesses, right? One interesting change in the tax rules was that deciding the accounting method, how you account for your income. Normally you have two methods, generally the cash basis and the accrual basis. There were restrictions as to who could use the cash basis. You had that average 3-year, 10 million gross receipts in a test. The change that came with the TCJA 2017, that number was increased to 25 million. So that gives a lot of businesses the opportunity to use a cash method of accounting. So you're only paying taxes when you receive the money, not when you earn it, as with the accrual method. You record your revenue when you earn it, not actually when you receive the money. So it's a good opportunity for businesses, right? So you may be doing great. You have a lot of income on the accrual basis. You don't have to pay taxes now. That can be deferred until you actually receive the cash. That was one. important. I'm not sure if there's any other. Okay. So that was one of the big changes. Okay.
Did you explain the state? Don't explain the state tax things already? Okay.
Okay. Okay.
Let me just add the itemized deduction. That took a great hit for people in California, New York, and New Jersey. In the past, what would happen is you were allowed to deduct your state taxes, that's on the income side, state income taxes, city income taxes, some people substitute sales taxes, and in addition, your real estate taxes. But what has happened with the new law? If you know, or you are fully aware, in New York City, houses are very expensive. So $10,000 in taxes is nothing. You can ask the people in the boroughs and Long Island. So we are capped at $10,000. This has a severe impact. The people that cannot deduct as much as $20,000, where in the past they would have been able to itemize and get that $20,000. Because, for example, so let's say for argument's sake, your state taxes are $8,000. Your city taxes, $3,000. Your real estate taxes, $12,000. You are capped with $10,000. So, and you cannot overcome it. There's nothing you can do, because under the itemized deduction, where we were able to deduct small things like this conference, y'all will be impacted. We would not be able to deduct that. You cannot deduct, well, they came after us. You cannot deduct your tax, whatever you pay for taxes, you can't deduct it. So you all will have to go to Vita sites to prepare your taxes, to save up. You know, there is the investment fees for investment. You can't deduct it. So we are hit pretty hard with this new tax law in states like California, New York City, as I mentioned, and New Jersey. There is also, I don't know if you know what is a casualty loss. You cannot deduct a casualty, because that's a real casualty. You should be able to deduct. But you can't deduct casualty losses if it's not tied to a disaster with a special number. So there's nothing you can really do. You just have to take the hits. There is nothing in this new tax law to benefit people that used to itemize. The people that were not able to itemize can now itemize. You know, they could, but those of us that used to itemize, because for someone head of household, 18,000 is nothing for itemization. It doesn't even make a dent. Anything else you want to mention? Yeah, we have tax bracket changes. Now, a lot of people get confused. I just explained that a little. Tax bracket changes. The way taxes work in the United States is it is done on a scaling method, right? And you actually, the effective tax rate, even though they say your tax rate is 20%, let's say for argument's sake, 20%, there is something called the effective tax rate. So you may not be paying 20% on all your taxes. So the initial, let's take a number. Let's say your taxes are $50,000. So the initial 10%, that $9,350 will be taxed at 10%. The next 19,000 will be taxed as 12%. So you see it's a gradual rate. The more you make, the more you pay, until you get to the peak of the 47% tax rate. So it's on a gradual basis. Anything you need me to clarify in taxes? Okay? You have one? Okay. All right. Thank you.
So another area that is impacting businesses is fraud. And we know that fraud is difficult to understand and also prevent. And it is also being perpetrated across all industries. So it is not limited to any specific industry. And one of the key things to help deter fraud is usually internal controls. But as we know, with internal controls, a company can have strong internal controls, but if they're not adhered to by top-level employees, it is going to actually make room for fraud to be committed. And there's a great need for all employees, both top-level and lower-level employees, to adhere to the strong ethical standards that the company is trying to implement. Also, for our internal controls, we know that there's something we call separation of duties. And if there is a lack of separation of duties, that is great exposure to fraud. And a classic example of that, we saw there was a case in the city of Dixon, Illinois, where the comptroller of the city was able to actually perpetrate fraud for over a period of 20 years and stole approximately $53 million over that period of 20 years. How was she able to do that? Because again, she was a trusted employee. The mayor and all the people of the city, they look up to her. She had actually a horse, she used to do horse racing. She was well known, and because of that, she was able to funnel monies from the city to a personal account that she actually opened in the name of the city also. And she was able to channel that money from the city, and at the same time, the city was out there struggling with their infrastructure. People were being laid off, right? But yet she was living this large, lavish lifestyle while she was actually embezzling over, like I said, over 53 million over a period of 20 years. And that was a clear example of trust, because again, they trusted her. They would go to her house and they would actually, sit and wine and dine and eat. No one ever took the opportunity to actually, look into it. There's another city that was right next door, and the city actually sent a letter to the city of Dixon, to the mayor, asking him, why is it that we're, similar in size and population, and we're having, our budget is good and you're having a deficit? But it was completely ignored until the comptroller, she would take 4 months vacation, which is highly unlikely because fraud perpetrators don't really take vacation. And she would actually take 4 months vacation, and go and enjoy herself. And while she did this, then the person that was actually the clerk actually requested a bank statement. So when the bank statements came in, she realized that there was this new account that no one knew of. And then the transfers were over like $1 million at a time, and stuff like that. So that's how she got exposed, and she was actually prosecuted, and she got close to the maximum, which was like 19 years or something like that in prison, and she had to pay back restitution for double the amount that she stole. So fraud perpetrators are actually responsible for their actions. And their decision to commit fraud or not commit fraud is totally up to them, and it's dependent on what we call self-behavior, self-control.